Wes, go right ahead.
All right. Well, welcome everybody. Glad to see everyone back here for another month of our Charlotte Investors Business Daily meetup. So, obviously last week we had some major news, the election result, the market, the event risk being lifted off of the market, and looks like this big catalyst for a lot of stocks breaking out, a lot of powerful moves. Um, from a lot of things we've been watching, a lot of things we held. And so, we're going to sit here and we're going to go over a lot of those ideas, a lot of those stocks, what we own, what we have bought recently, what's on our watch list for what we're titling the year-end sprint. It looks like we're off to the races. We think that this can continue at least through the end of the year. And, um, we're in this window where we've got really powerful moves that we're here to take advantage of and hopefully offer some ideas and help you guys take advantage of those explosive moves in individual stocks for the rest of the year and hopefully into next year. But as far as we can look out, we're kind of just thinking, okay, next 6 weeks, everything's working. Let's keep that going. So, if this is your first time, welcome. We're the Charlotte Investors Business Daily Meetup group. We have over 2,500 members now. And and I have been leading this meetup group for several years now. What we talk about today is grounded in the book How to Make Money in Stocks by William O'Neill, and is often cited CANSLIM acronym for leading stock criteria. So we're going to go over some of those stocks that that have the criteria that he would have said were for the market leaders. So um, it's a great community. If you haven't joined the meetup group, please Google us, the Charlotte Investors Business Daily Meetup Group, and join that and stay connected. Here's just a disclaimer that we're here offering information. We're going to talk about things that we're doing. Consult your uh, financial professional, your advisor for actual financial advice, but we're going to give you a lot of information and it's for educational purposes. So, yes, please do with this information what you wish. Okay, and if you're new, I know we go over this every month, but this is that CAN-SLIM acronym. It's the seven-letter acronym for different criteria that William O'Neill saw were ingredients for a leading stock to really have a monster run. So that's current quarterly earnings growth of at least 25%, annual earnings growth of at least 25%. You're looking for new industries, new stocks, new products, new leadership, new highs in price. For that NS, we're talking about supply and demand. So we're looking for, that volume signature. That's the fingerprint of institutions buying. So you can see that in letter I, institutional sponsorship. So you're looking for what pension funds, mutual funds, hedge funds are all buying. The leader or laggard. So we're looking for, the very best of the best. We want to concentrate heavily in those particular things to really make a difference in our financial lives. So look for the top stocks, but also look for the top stock within an industry group too. One of the things that I think people have tried to do, as an example, is say, AMD is going to be the catch-up play, or you can buy TSM because I don't know, it's the same theme, but really, you can just concentrate in one, and that's NVIDIA for us, and has been for the last, I don't know, couple of years, just as an example. And then market direction. So if we're in an uptrend, most stocks are going to work. 3 out of 4 probably will follow the market. In a downtrend, the opposite is true. Clearly, the indexes, as we measure them, are in an uptrend on almost all measures. And, we've seen that kind of success rate pick up recently because of that, because we're on the right side of the market, being long right now. Okay, and we'll talk here about just a brief overview of our process. So we're talking about three stools right here, but we'll talk about why macro is kind of taking the back seat. We don't want to be distracted now with macro. So I think that's really common that, bull markets, you forget about macro entirely. Bear markets, everyone becomes a macroeconomist. Right here, we're in this powerful macro or this powerful market where don't try not to be distracted necessarily by macro. We'll touch on a few things, high level, growth, inflation, interest rates. I'm still going to mention those because that is what could derail on the macro front. So it's something just to keep an eye on. But we are going to, again, just like last month, with the number of setups and with the number of powerful stocks, we're gonna focus on the stock side of things today. But technical analysis, that's really the starting point for our approach to investments. We're talking about trend mostly. That's the main point here. You can see how we measure that trend. For us, we have to talk about short-term, intermediate term, and long-term trends. There's breadth, sentiment, and different ratio analyses you can do. Where, breadth being participation in the market, sentiment, really looking for extremes and bearishness or bullishness and different things like that. Um, but primarily we're looking at trend, and it's really the number one thing that we look at for any stock. First of all, it needs to be in an uptrend for us to even consider. And then fundamentals, we're talking about revenue, earnings, margins, all these things. Again, that kind of comes back to this CANSLIM acronym. And obviously, you can dive deeper into fundamentals if you want, if you have the time, if you have the resources. It's the second, however, secondary really versus the price action itself for us. Okay, so I'll just go on and talk about a little bit about this, the developments over the last few weeks. We know Trump won, and just I don't know, just put this in here because we've been talking about the voting odds, and clearly, the market's trying to figure out what this means, and so we're going to try to help you, figure out what it means for markets. Overall, you can see that the things that have exploded from his victory, the market's telling you those are the ones that are going to benefit the most from his presidency. So we'll obviously highlight those. Uh, so I just wanted to show this a couple more times. We had this betting odds thing. I think this is the first time we've really had observable betting markets for a presidential election. So I was, looking at this really on a daily basis just to figure out what the market was kind of trying to say. This is actually looking at a month ago when we met. You can see where Trump had just taken that lead there, but it had gyrated quite a bit, right, for a few months. And then here's what it looked like, heading into November, whatever the market was seeing here. It's not totally clear, but it, if you're trying to figure out what is the market guessing, this is obviously the best way to, determine what people expect. There's no better way. The polls, we've seen to be inaccurate over many elections. So I thought this was fascinating. I think it's a great tool. I'm glad that we're going to have it in the future as well, because you can kind of use this as your guide. You don't have to make up your own opinions. You don't have to trust the polls. You can hope that this market is the most efficient, um, is the most efficient vehicle for guessing who is going to win. And even though it was like leaning Trump like 60-40 around near the election, clearly the market wasn't really, that stock market was not pricing in this Trump victory entirely, right? Because we had these massive moves and things following that. So it's an interesting lesson there too. Even if you see just that advantage towards a candidate, it's not necessarily enough for people to be placing big stock market bets. People are still hesitant, and that's why we've got that a little bit more runway here because people can't put on their bets also on day one, following this election result either. So that's why I think we get more momentum to continue because it takes time for these things to bear out. There's still uncertainty about what's going to happen, what kind of policies will be enacted, but for now, we're going to be following the money. And based on the initial reaction just 1 week after the election result. Yeah, and here's one reason why, we've been pretty bullish too. We've known we were in this sort of 12-month cycle right here from the beginning of, or from the middle, sorry, of 2024 to the middle of 2025, based on a typical election cycle, 4-year cycle. We're going to see this 12-month period being a very solid period historically, right? So this is telling you, okay, we're right here. Okay, this is where you have maybe a little bit of election fear, the immediate election bump. We've just had that. Maybe we consolidate a little bit more before, heading higher. But, in this kind of environment, we can certainly navigate very well if the indexes go sideways and some of these leading stocks we mentioned continue to work. So, this is kind of where we are, and that, and again, the uncertainty about what policies might be enacted, what he means for the economy, we'll see, right? We'll get more and more clarity. We'll see if anything takes meaningful, if he makes any meaningful change that seems or is perceived positively for the markets. But we're in this pretty good sweet spot where we think we've got some more room to run. So here's a look, just the Trump trade, it's on. We've got the Qs, breaking out on this day. That was the Wednesday there. So far, we followed through one more day on Thursday and have not given hardly anything back. So, we view that pretty positively. There's not been any meaningful pullback here in the Qs since then. The Russell, similarly huge breakout. Finally, this has been one that people have been trying to get right for several months. We have tried to get right for several months, waiting for that breakout. Well, it finally broke out to, all-time highs. So maybe that's what we really need. There's no more overhead. I think people can easily assume and extrapolate and pile into this trade because of what happened, following his first election. I think following his first election, we've talked about this power trend in the past, the power trend, and how, that's a really good environment when certain things align in the trend, and it's a very strong trending market. You can have a lot of success. And in 2017, after he was elected, I think we had the longest power trend we've ever witnessed. So, you wonder if people are just going to assume, okay, he was good for the market then, he's going to be good for the market, now for this cycle. So one thing I know we're going to talk about, and everyone is probably paying attention to, is this, Bitcoin move, huge Bitcoin move. I was watching during, on Tuesday night, I was watching the election odds on Robinhood, on their app. I was watching it in real time, trying to understand, what the expectations were, what was getting priced in, as every sort of state closed. Similarly, I was watching Bitcoin, as probably some of you were, because that's another good, voting machine. It's another good indication of the election odds going in in Trump's favor, essentially, because he's clearly going to be more friendly towards that crypto regulation. So this is a huge move. We own a lot of this Bitcoin and MicroStrategy. We'll talk probably about that too, which we've used as a vehicle to play the Bitcoin theme. That one's an interesting animal because it has other things going on with debt and equity issuance, but it's been a monster stock for the last couple of months. And now I'll touch a little bit just on macro, because this is the one thing that I worry about, right? Derailing any kind of strong bull market. The CPI, that's picking up a little bit right here. It may have bottomed in September. The nowcast is saying 2.6% October, 2.7% in November. That's one thing I'm keeping an eye on. I don't want to see that go above 3. I think if it goes above 3%, that kind of ensures that the Fed takes a pause, because that's kind of a meaningful acceleration, right, from 2.4% to 3%. So that's kind of how I'm looking at it is if we're approaching three again, the Fed probably takes a pause earlier than the market might be anticipating for more cuts, right? They've cut three times, I mean, two times, but 75 basis points they've cut. So this is something I'm keeping an eye on in real time. There's things you can look at with commodities to determine if inflation is getting away. Bitcoin, I don't think necessarily is that indication of inflation getting away right now. Because while Bitcoin's going much, much, much higher, gold, silver, copper, oil have all come in since Trump's election. So, anyways, I'm keeping an eye on this, continuing to, and you can see with recent data, different things happening with markets at all-time highs. Also, that might be a signal that the Fed does not have to cut. This is the odds of a Fed cut in December right now. So it's sort of it's 60% that they cut 25 basis points. We'll see where that lands. I think there's a lot of time left for them to change their mind and for these odds to change to keeping it the same. I think that the more this market runs, the more the equity markets run, the more likely it is that they stay put because it does seem kind of uh, extreme for them to be cutting and adding liquidity to a market when we're at all-time highs and perhaps you know having this really strong bull run. So I'm keeping an eye on that for that change in market probabilities. I don't think it would be shocking if a month from now they end up not doing anything. Okay, and just a quick look at the leading economic index for our kind of growth outlook. It's still not really improving, but we'll see if there's just maybe what we call animal spirits in the economy. Whether there's this perception that Trump's friendlier to the business, that there's just more confidence, and then that confidence leads to actual, you know, real investments and accelerations and projects. So we'll see if that actually comes to fruition um, with his presidency. But for now, still waiting for some meaningful impact here. But the stocks, the thing is, we're seeing stocks break out. We're seeing, um, you know, really, really strong market reactions to good earnings. It makes you think that, we're pricing in this kind of economic expansion coming from lower taxes, deregulation, things like that. So, um, we're certainly bullish with what could happen. And then just lastly, we'll talk about a little bit about interest rates. Rates have come up quite a bit from when the Fed actually cut rates. At first, when they cut, you're trying to figure out, okay, is it because the Fed's making a mistake and is inflation going to accelerate? Maybe a little bit to some extent, yes. But then you also wonder, okay, could the equation be changing because of better growth? And I think with the equity markets rallying to all-time highs, while interest rates are also increasing, I think that's really telling you that it's the growth portion of that interest rate equation that's improved over this time. Sure, as I mentioned, inflation is accelerating, perhaps a little bit. We'll see if that stops out here. But in the meantime, that's kind of how I'm reading it, is that this increase in long-term rates is really not as much an inflation scare as it is saying, wow, we could actually have this strong economic expansion. So for now, that's kind of how I'm viewing this action in the 10-year. But the other worry is, okay, look, the Fed cut rates. Was it a mistake? I don't know. That's also the other interpretation. It could be, but for now, there's no real warning signs. The 10-year going higher is just going to be that accelerator on the economy or the brakes on the economy. And for now, it's saying, okay, we can apply some brakes or we can withstand higher rates and not go into a contraction. So, not something I'm super worried about. I don't have a super strong opinion about where it should go, but for now, again, it kind of takes a backseat to stock action, all this stuff. And the stock action, we're seeing this is the QQQ equal weighted. So this is like a broader, that broader measure of the Qs. instead of that sort of heavier concentration QQQ index. So, this broke out the new all-time highs. It's consolidating for now the fourth day right here, hardly off the highs. Really, really strong action. And then, lastly, here's the FFTY, that Innovator IBD 50 fund. So this FFTY, right? It's indicative of the stocks that we are trafficking in usually. And you can see this explosive move from the election day. So, Roy will go over this in a second too, but you did see this really positive action Tuesday, ahead of actual results, right? So we did actually add a decent amount of exposure thinking, okay, it looks like, the market's signaling something. We need to get a little bit more invested, and not miss this move, right? Because it's brutal to have to chase an open like that. If the market's kind of signaling, we're about to take off. So we did actually add some Tuesday, even ahead of the election, just because that's what the market we thought was telling us to do. And since then, again, that pretty strong breakout in FFTY coming in at, 1.5% here. Okay, not so bad. Everything needs to take a rest, perhaps. We'll see how many days that is. These really, really strong stocks are just going to take a day or two of rest. And we might be getting that today and tomorrow. That might be the 2 days of rest to get in some of these leaders, and we'll talk about a few of those again. So, yeah, with that, I'm gonna hand it over to Roy. He's gonna kind of go through some of these tweets, just kind of showing our process and a live look at it through the last week, and just hopefully learn something from from the process of taking a little off, adding a little exposure here, and then not being afraid to put the pedal to the metal when a significant breakout like this occurs. So Roy, I'll just hand it back over to you and let you take us through maybe the last week or so of tweets or whatever you had planned.
Yeah. Thanks, Wes. Okay, guys, are you seeing my screen? This should be my Twitter feed. Are you guys aware of this? Is that on your system?
Yes.
Okay, good. Okay, again, listen, Wes, great job there. Great information. And by the way, if you're on our mailing list, we'll send out a copy of this recording tomorrow along with our slide deck. So you should find that very interesting as well. And what we wanted to do is show you sort of the way that we communicate. And we communicate, we don't have the resources to pick up the telephone and call 300 people anytime we buy or sell a stock or anything that we do. But we try to communicate on this using this mechanism, which is the Twitter feed, of course, X. And we wanted to just take you back to, and by the way, my Twitter feed is at Roy L. Maddox. And we wanted to take you back, recently, but you can go back years to get an idea of, how accurate have we been. I think you'll be quite impressed over, the last, 4 to 5 years that we've been very accurate. So let's go back just a little bit. And we wanted to sort of take you back to what we were looking at. And before the election, and I thought this was useful too, because I covered some topics that we'll take a look at in our Twitter feed regarding cushion, regarding earnings risk, and things like that. But this is kind of how we were posturing, and this is right before the election. And let me take a look. And what we also do is we try to own up. If we make some mistakes from a educational standpoint. We try to show you some of the mistakes that we make because we're not perfect either. And you shouldn't expect to be either. This is a probability exercise, a probability game in terms of following the money. And, with all the information that you have at your fingertips, and there's a lot of fundamental information out there, how do you make the best decisions? So we just wanted to take you through sort of what we've been seeing over the last week or two. But we do this in real time. For example, October 24th, when you take a look at this, we bought Tesla at the market open at 245, and this was posted probably at 935, 940. So we bought Tesla right here at the open. Let me see if I can make this larger. Yeah, let me see. I can't do it because we're on Zoom, but here's the Tesla feed right here where we bought it right here with a very tight stop of only $2.50 on a $200 stock. So that's really managing the position very, very tightly. We bought Flutter, F-L-U-T, here at 226, and we gave a little bit of background. So we entered it in our swing trading accounts, and there's our stop. So we had, in this particular case, again, a stop of only a couple of percent. The next one, FNGS, and this is really the MAG 7 stocks along the large cap growth, same kind of thing. And most of the time we put in exactly where we bought it as well. So you can find that useful too, particularly if you're looking and reading that tweet during the day. And you can see exactly where we bought it. And, many times we're putting our stops in there as well. And that's not necessarily for you to follow us exactly, but we're just sharing what we're doing from an educational perspective. We sold this MSTR. This was 100% gain. And it's, over my career, I've been doing this 37 years. And I've met Bill O'Neill and David Ryan 36 years ago in a seminar that I attended in Houston, Texas, back in 1988. And I've got a copy on my bookshelf here of their book, which is one of his book, which is one of my prized possessions that he and David signed 36 years ago. Even though now we've got 4 different editions and the book's been certainly improved and updated. But you will find that, if employed properly, and this is why it's very difficult to achieve, triple digit returns, because you have to concentrate. And by concentrating, really, for us managing the pools of money that we're managing, 10 to 15 stocks is adequate from a standpoint of balancing the risk reward, having, adequate concentration and diversifying the portfolio. For us, we don't think there's any way that you can achieve triple digit returns with 50 different stocks, because you just get S&P returns in that particular case. And for example, what we found this year, the majority of our gains, and we're up very, very large this year, but we made 100% in NVIDIA. We had a 10% position in NVIDIA that we made 100%, and we made 100% in this MicroStrategy position that we recently sold right there at 258, and we sold half of it like that when the post came out. We ended up selling another half of that half that was left by the end of the day, and we sold the rest at the opening the next morning. So we did book, we did book 100% gain in MSTR, and we also talked about buying it back as well. Let me see if I mentioned it. We just talked about the paired trades there. So in this case, 20% of our maybe 50, 60% gains this year occurred with 2 different stocks. So rather than try to have 100 trades where you make 2%, 1%, 2%, 3%, we found that, if you get one of these monsters, you want to have a concentrated position and hold on to the position as long as it's not doing anything wrong. As long as it's not breaking down technically, as long as your stops, haven't been hit, And that's really, over my career, that's how I have found that that's been the best way psychologically for me to move the needle. I'm not psychologically wired where I could have $1 million in a position and have that position drop 30, 40, 50%. I just can't do it. So, some people can, but I just can't psychologically tolerate a pullback like that. But like Jesse Livermore says, when you get it right, the big money is made in the sitting. And so that's a philosophy that we employ and that we advocate even. So here's an education example on TMDX, and we talked a little bit about getting in this position and then getting out of the position when it didn't act, when the stock did not act right. So that was a great educational position. Now, this is really interesting. So right here, our top pick, this is November 2nd before the 5th election. This is the only position I think that we held in our swing trading account. So we had a 10% position right here in IBD. And also we're looking to buy MSTR back if we can get the setup and entry right for the next leg up that we anticipated. And so go back, and I can't pull this up, but you can take a look at this. But you can see that IBIT was about $38 at this particular time. So that's very useful information. And then we give this was our pre-election update. And so let me take a look here, see if okay. So this was our approach. So many of you took advantage of just this information here that we provided. And we were talking about the headline risk. So this was our view. If Kamala wins, you probably get a Hurricane Katrina. And we thought the market could go down to the 200-day moving average, the way that it broke before in late July, early August. So, again, we made the point there that don't let your biases get in the way of, sound investment decisions, because a Democratic presidency or Democratic agenda, according to the Stock Traders Almanac, normally it slightly outperforms a Republican administration. So, we were of the view, because of the market, accumulation that we were interpreting under the surface, that if Kamala would win, the market was going to have a brief, 3 to 4, 5 day pullback. Going back and looking at past elections, we thought that, okay, that window might last, 2 weeks at most, and with about a 7% correction. So with that in mind, a 7% downside possibility and an 8% pullback in the Nasdaq, we didn't want to give up. We didn't want to give up, 8% of our profits, because, as you know, growth stocks at 8% minimum, because growth stocks with the high beta pull back more than the indexes, typically twice the indexes. So, we didn't want to we had to protect, from having a 15 to 20% drawdown in our accounts. And that's why we were only 90% in cash and only 10% invested, and 70% cash in our core accounts after de-risking and selling some of our stocks. So we thought, that this was really important, which was having a game plan going into the election based on the headline risk. We weren't willing to risk and gamble. So that's why we had exited, but we were ready to move back into the market. Now, the day before the election, Palantir reported, and this has been Wes's number one pick for the whole year. And he's done a great job in terms of keeping us on board here. But we had a 35% gain going into the number, and we sold, I believe we sold half of our position going into the number. And this is what we were looking for. Okay, a weak report, and we were going to be out with half of the balance that we had in our core accounts. A great response would put $100 target in the crosshairs. We think the stock goes to $100 probably by the next earnings report. So we're great, huge fans. This is what we view as the number one pure play in AI, but they had to deliver the earnings quarter, and they in fact did. So what do you do with that information? Okay, right here, great report, goes to the top of our buy list, regardless of who wins tomorrow. And basically it's this. Okay, if you think Palantir, and I listed all the fundamental reasons that that the company reported. If you think Palantir is overvalued, overhyped, and is reporting peak earnings numbers, you should sell it or short the gap opening. This would have been Tuesday morning. If you think they're about to accelerate adoption, you buy. It's that simple. We bought right at the open. So we bought right at the open, and that was important. Now the day of the election, November 5th, before the earnings came out, we saw the market turning. So we saw the market turning. We were prepared to wait till the election results were in, but we saw definite moves in stocks that we were following based on our fundamental analysis that we thought was important. And so we moved to an 85% position from 30% in our core accounts, and 74% from a 10% position in our swing trading accounts. And this is exactly what we did. Now, this is the day of the election. So we bought Palantir, MicroStrategy back, Reddit, Park, ISRG, and we also bought the leverage indexes. That's the QQQ.
Eater.com, you're fucking famous.
So that's the QQQ and also the S&P. We also own GEV, which we sold incidentally today. DoorDash, Nvidia, Spotify, Tesla. And these are stocks that we were interested in as well. So that's exactly what we bought the day of the election before we saw the results. So that's exactly what we bought. And right there. And then these were stocks that we were interested in, and we actually bought these the next day. RBRK, Roblox, ALAB. That's what we bought those the next day. And again, we would have preferred to sit, not do anything, but that's, you play the market. You play the market that you're given. And so the next day, November 6th, there's the breakout that everybody's been waiting for. So this was like a 7-month breakout right there at 74,000. So there's the breakout. Now, this breakout should take it from 75,000 to 150,000. And we think based on the power of the move, that you're going to be at 150,000. I think we'll be at 100,000 by the end of the quarter, and we'll be certainly at 150,000 by the first quarter of 2025. So think about this if this is an individual stock, and this is just based on the technical action as we interpret it. If this is a $74 stock and it's 89 right now, you got a long way to go from 89 to 150. So this thing, don't feel like you've missed it. Now we've got a massive position. We've got 20+% position in Bitcoin, and Bitcoin, which we include FBTC, IBIT, and MSTR. So we think that this is one of those trades that it's going to potentially make our year. It's going to make next year for us with a 20% position, not just a 10% position. We think, we think a 20% position for us makes a lot of sense. And of course, if that position doubles, your account moves the needle up 20%. So we think it's highly probable and highly likely that that will take place. And that's why we're positioned there so aggressively. Again, November 6th, we shared exactly what we did. We added to our holdings in TQQQ, UPRO, Mr. Tesla, NVIDIA. We added new positions in RBLX, RBRK, Netflix, and ALAB. And again, because our interpretation of the market was so strong, that's why we did not delay. We hit the accelerator. So if you waited too long, these things moved up so fast with the momentum so strong that now if you buy, there's the opportunity and the risk that you'll get shaken out in just a normal 2 to 3 day pullback. So we're not going to get shaken out in a 2 to 3 day pullback. And as Wesley said, this might be day one. And with $4 trillion on the sidelines, we think, and with the presidential cycle certainly heating up, we think that we got clear skies ahead.
And Roy,
yes,
I mean, just to add in about the money on the sidelines, because I mentioned this to you, like 4:30 today. We're certainly seeing that. We just with the communication we're having with some clients and just prospects and or different people that have reached out. It's kind of been a flood of emails. So that's just anecdotally, we're certainly seeing that there people have been sitting on cash, happy to collect their 4.5%, and then you see, when you see Bitcoin up 25% in a week or 2 weeks, you think, oh man, my 4% isn't so great, and it's going lower. That's what everyone's telling them, right? The yield's going lower. So there's certainly still some money to be unlocked, probably, and you're seeing that really, really quickly and early on, I think.
Yep.
Oh, hey, Wes. Speaking to another equity fund owner, and he said that in the US or maybe around the world, there are enough old people and there are enough trusts for very, very young individuals, and that money will never move out. So, because that's all the risk they can take for that situation. But truly, it will draw money from other less riskier assets. Yeah.
Yeah. Okay.
And again, we don't. And there's a great question here. Do you hedge any position? I do in that Twitter feed. I didn't go through it right here, but if you go back and take a look, we talked about that, and we talked about two stocks that we got hit in earnings. Listen, it's a crapshoot in the earnings. You would never think that the stock would go down if the stock, in the last quarters have upped and raised their guidance, and the stock is strong technically. But really, in our experience, half the time, half the time you get a break down. And so it's just, we don't think that it makes a lot of sense to hedge like with options unless you have a big position. Where, and I make the note that I've had dozens and dozens of stocks over my career that are made 100% in. I just showed you, we just talked about two this year that contributed to our, a big part of our gain. So, again, I can't take something up 100% and then let it correct 50%. If you have a gain like that, and we have one of our friends that's typically on these calls, and he's got a massive position in NVIDIA that he bought 3 or 4 years ago at 20, and he's got a 10 bagger in it, and he's got, I think, 3 million in it. Put in 300K, 3 years ago maybe, and it's worth, and he's got 3 million in it now. So and that's the majority of his investment account, at least half of it anyway. And so he hedges every earnings cycle. And I would certainly do that if if I'm up 1,000% in a stock. But if you're up, 20, 30% or something like that, it really, for us, it doesn't make that much sense to hedge, because what that does is that just removes the upside possibility. That removes the upside possibility. If you're worried about the stock dropping, it's best, we think, to just maybe sell half or sell it all. And from a swing trading perspective, rarely do I hold a stock into the number. Rarely. And even even the Palantir trade that was one of our top picks in our swing trading account, which is really mirrors my personal account. Rarely do I hold a stock into the number. But what happens is you miss stocks, and such as like tonight, Shopify. This was actually yesterday. Shopify reported.
You're thinking Spotify though, right? Because you.
Oh yeah, Spotify. Yeah, excuse me. Spotify was tonight, but there's Shopify that we didn't own, but now it goes to our buy list because the tremendous amount of volume there and the breakout on volume. But Spotify reported tonight, and we happened to hold this into the number, and the stock is up $29. So this is a stock that looked great going into the quarter, and it also had a great response. However, just 2 days ago, MNDY looked great going into the number, and then the stock got trounced by a meaningful amount, 15% or so after the quarter. And you could not have seen that the stock was going to react that way. Wes, what are the two that I featured on Twitter that we got blasted in?
Yeah, it was Hood, first of all, which, that's a brutal one too, because, it just came roaring back on the election day, 4 days later, but that's how it goes. And then it was Hood and
Shark Ninja.
Shark Ninja,
Sure.
that's right. Yep.
Yeah. So guys, look at this. So we had a 20% profit going into the number, and this could not have been a better setup. It couldn't have been, a better setup. And then the stock got blasted by 20%, and we sold it because we didn't know where it was going. And the stock rallied all the way back. So, there's nothing that you can do about that. Now, we are interested, and we almost bought it back right here a couple of days ago, but we're fully invested and we didn't have any funds available. So if this stock comes in and turns, we're interested in buying it. So take a look at Shark Ninja. See, Shark Ninja looked beautiful. We had a 20% profit going into the quarter. And look what happened in subsequent quarters. This is what I'm talking about. So you have an earnings beat, raised guidance, the stock broke higher on great volume, and you hit this earnings drift to the next quarter. Gapped up on big volume, beat, raised the numbers. Next quarter, gapped up on big numbers, raised, beat, guidance, and so forth. And so this stock looked perfect, and we held this with a 20% gain, and we got blasted. Now, we didn't lose money in the trade, but we gave back all of our profits. So we listed this just to show you that it's really a crapshoot. You don't know, and it's just so you have to sort of look and see also the context. Are many of these working, or are they not working? So, and that's a qualitative, not a quantitative decision. So you just really never know. And so that's our explanation there in terms of holding something into the quarter or not. So let's take a look at the Nasdaq, and then we'll take a look at what we think are the leading stocks that you can screenshot, and we'll answer questions on these, and also answer any questions on any stocks that you're interested in, because we certainly don't have all the ideas out there, but we think that we're in the leading stocks in this uptick and uptrend right now that we're pursuing. So here's the Nasdaq right now. So here's the power trend that we've been talking about in all of our meetings, in the last year or two. And if you go to Google and go to IBD, you can Google what a power trend is according to IBD, and you can see that I've annotated this, and this is very, very useful, we think. So basically, this power trend technical approach, what it signifies is that's a time where you can be, and you should be on margin. That's when everything is in a very strong uptrend, and that's not telling you to be in or out of the market. That's telling you that if you're in the market, that you should be off of margin or on margin. So we're more than 100% invested in I think in both of our strategies, and we're sitting. So we're not, if you bought correctly, like right there, and if you bought on that turn right there and then pressed right there, which we did in a meaningful way, that we're fine for the market shaking out, coming in, going sideways, because we think the momentum is clearly strong. And we don't think that any of the positions that we bought are going to turn into losses. So we can sit. So in subsequent days, based on kind of what we're sharing with you here, if you get a 2 to 3 day pullback, we think it's viable. And because that was a very powerful move on big volume, and we don't think that that's going to be stopped anytime soon. But right now you've got FOMO. Bitcoin, for example, is not giving anything back, and it went to new highs here. And again, we think that this is going to be $100 in the first quarter, by the first quarter of 2025. So it just broke out, and we featured this before the election. And it broke out right there at 42 before the election. That's what everybody was looking for. You had a great opportunity following the tweets to get back in the position and press it. If you were so inclined, and we were so inclined, and that's what we did. So we're just basically sitting and trying to work into a position where we're not interested in making 20%. We think that this has the potential to be up 100, 200%, in the next, 12 to 14 months based on where we think it's going. So, very, very strong position there. So let's take a look at,
Roy, may I ask you a
yeah,
question?
go ahead.
So on Nasdaq chart, there are some indications like power trend start, power trend end. Is it based on investors.com IBD, or is it some kind of what is this based on? Like power trend ends and power trend begin here.
I put it in.
Oh, okay.
So that's based on the definition of what a power trend is,
Mm-hmm.
and when it begins and when it ends. And again, you can go to IBD and search, and they'll tell you it's I think 10 days where the 10 days above the 21-day exponential moving average, 5 days at least where the 21-day is above the 50-day moving average. The 50-day has to be in an uptrend, and I think that's it.
Yeah. Mm-hmm.
And the index stays into a power trend until the 21-day breaks the 50-day on the downside, or you get a 10% pullback, or you have a vertical violation of the 50-day.
Okay.
And again, right here, this is what we were afraid of. And right here, this move right here, right there, where you had this big break in 3 days. And that's what we were afraid of, that we would get that move just like that. You know, if Kamala would have won, that's what we thought would have happened. You would have had a very, very, uh, very big period of distribution, brief but significant. And, again, these growth, when you go back and you look at these growth stocks, many of these growth stocks dropped, 20 to 30% in 3 days. And, if you're fully invested and, and your equity drops 30%, that's a lot of pressure. You're not able to sleep at night if something like that happens. So that's why we were so cash heavy going into this. But when the event didn't translate the way that we thought or the way that we interpreted it, we immediately not just reversed our position, we put our positions on based on what the market was telling us. So you had to, and even though we were basically out of the market, we just had a 10% week because we immediately put our positions on in a very quick fashion. Now, with the positions on, all you have to do is sit. Basically, all you have to do is sit. If you're not invested, there's going to be some opportunities to buy on pullbacks, and we'll show you what we think the leading stocks are.
Roy, may
Yeah.
I ask a quick question, if you don't
Yeah, of
mind,
course.
going back to the IBIT chart you were showing?
Yes, I bet.
Yes. So you expect this to go to about $100 in the first quarter of F25.
Yes.
And let's say if you're holding, I'm holding a majority of my account around the breakout area I bought into.
Yeah.
Where would you wait for it to consolidate or pull back before you adding it to the position? Like, how would you add?
Yeah. Yeah. And again, remember, this is for educational purposes, not for providing investment advice. But I'll just basically tell you what I would do if I'm not. You're in the position, so with being in the position, you could take the profit right here. If you quote, very short term oriented, you're up 20% in 3 days. But we think that there's major upside in the number one asset class that's been blessed by Trump. And if Bitcoin it becomes a part of our of our treasury reserve, you should never sell it. This is something that you can hold for the rest of your life, just like the US dollar. So this is a very unusual quote investment with 21 million units outstanding that is potentially can be adopted by sovereign countries across the world, and that's going only with them buying and other countries buying, that's going only drive the price higher over time. It's just basic supply and demand. So it's a very unique instrument. And the last thing that we're waiting for, by the way, I don't know if you saw, but the SEC chairman Gensler, he's resigning at the end of the year, and he's been really blocking legislation. He's been blocking the adoption of Bitcoin and so forth. So they're getting him out of the way, and they're going to put somebody that's pro Bitcoin, and that's what this asset is telling you right now. Is that it's going to be, this is a powerful breakout based on the Trump agenda, and it's going, in our view, it's going to go much higher, and it would be silly to project like where do we think it's going, But, Michael Saylor believes that, Bitcoin potentially can go to $3 million, in the next, 5 to 6 years. Kathy Woods is on record of saying that as well. We frankly have no idea where it goes. But again, with BlackRock as the largest owner, they've got 1 million units of Bitcoin right now. Imagine when you have all these investment firms all over, the world, buying it for their clients. And this is way early in terms of the adoption. So this has the potential of moving the needle. And let me show you sort of like, let me pull up MicroStrategy and just just show you something that is potentially possible. So here's MicroStrategy. And I want to show you something because one of the biggest winners that I had over my career was in Qualcomm in 1999 and 2000. And I want to just show you sort of what that looks like. And, go back, and it's always useful. And again, I've been doing this, several decades, a number of decades. So I find it useful to go back and look at precedents to see, what happened in such and such times when you had the animal spirits out there. So this is what MicroStrategy looks like on the monthly right here. So basically, it's just broken out right here, green line breakout. And we broke out last month. We followed through right there. So let's take a look at something that what might happen. And here's Qualcomm. And let me change the date to March 03, 2000. Okay, so you had this breakout that right there. There's the breakout, and there's the breakout, and there's the second month, and this is where I think Bitcoin, this is where I think MicroStrategy is right now, and this is something that, and I had a huge multi-million-dollar gain and during this period of time in my investment account 25 years ago, when the internet bubble occurred. And so, Wes and I were, we've been on this looking for the right setup, waiting for the right price, waiting for the right situation. This is where we think potentially MicroStrategy is. And this is something that went from 14, 20, all the way to 200 in the course of the next 9 months. And notice where it doubled right here the last couple of months before it broke. But you'll see if you go back and you look, then it came unglued. That was the peak for 20 years. Right here, there's the peak. But we think that we're right here and in MicroStrategy, and which is a leveraged way of playing Bitcoin. And we think that this is potentially, can change your life. And let me go back to MicroStrategy. And let me change the date to today. And this is using the monthly. And here's the move here. And if you translate, like, what kind of move could you get if Bitcoin goes up, 100, 200% in the next year? This thing is on its way to 1,000 in the next 12 months. And potentially it's on its way to 3,000, or 2,000, a tenfold move from right here, potentially. So we have no idea. This thing could reverse tomorrow. It could be down, it could be down huge tomorrow. You immediately change your view, but we've seen this before, and we know how animal spirits work. And just from my experience, going back 25 years, that's something that can move the needle. That can make, that potentially can make a life-changing result. Now, when you take advantage of an opportunity like this, there's no right answer in terms of how much money should I put in something like this? How much money should I put in Bitcoin? For us, certainly we have over 20%. And so, we want to move the needle, not just have 1 to 2% and have, and get the greatest potential winner of all time, and we have 1 to 2% in it. We want to move the needle, but we're up in it, so we can afford to sit. And it just shows you today how strong it was, where it shook off. I mean, yesterday it was up 40. How much was it up yesterday? Trying to get that right.
MSTR, yeah, that was 26%.
Okay, I'm trying to. I can't get that. I can't get my cursor on there. So it was up 25% today. It was down slightly on the open, shook it off, and it's come back and made new highs. So that is telling you that there's huge accumulation going on right there. So you gotta make that decision, that determination for yourself. But you certainly have to manage the downside. So anything is tradable, and any stock chart pattern. You could be a value investor, you could be a growth investor, you could look at fundamentals, you could look at technicals. But anything that you do, you've got to have a risk strategy in mind, and you have to have an exit strategy if you're wrong. So that's what we're like laser focused on now. And when you have sufficient profits that are built up, then you can afford to sit. So I encourage you, based on the market environment, some of these stocks that we're going to look at, right now, they're the leading stocks that we think are going to go higher. And most of these, have reported. But, again, what we did is we immediately put on leverage positions in the S&P 500, which we think, coming in, if this comes into 91, 92, we think it's buyable. We think, based on the technical pattern, what we're looking at here, we think this is probably $115 to $120 stock by the end of the year. So, you have plenty of upside. You've got a pause here. The pause could come back to the 10-day, and that's how we would play it. Here's actually, let me expand this. This is for us. This is our core portfolio. And you can do a screenshot. That's what we own. Except we sold this GEV today with a 23% gain in it. So this is what we own right here. And we'll take a quick look. The TQQ is the same thing. It's the same setup. And there's the TQQ, which is the leverage Qs. And there's the breakout. This is known as a volume contraction pattern from here to here, here to here, and here to here. And then this is a classic breakout, classic buy signal. This, and it hasn't taken out the all-time highs yet. This is picture perfect. And we actually, on our Twitter feed, we mentioned that before, where we thought that, okay, we could come back here, and we profiled this where, we had a 16% pullback right here, an 8% pullback right there. And we thought, and we noted this like way up here, that we thought that the market could come back 5% to this 50-day. That's in fact where it went and turned right there. So you have 3 successive pullbacks, and you rarely do you have a setup that is picture perfect like this. And that's what made us so, we knew what we were looking at. That's what made us so aggressive. And, just perfect, getting tighter on the right side. And there's the breakout. That's the Mark Minervini special right there. So if you come in, if we have a nasty day, in the next, couple of days, we think it's going to be contained because the smart money is seeing exactly what I'm seeing. And we think that they're going to be buying, any weakness that occurs. Spotify moved it's up $29. This thing looked great. We took a gamble of giving up our profits because the last few times, in the last week, we're seeing the stocks that we're interested in, they're breaking out and holding their gains. That's why we held this and we got rewarded. So this is something, we think from this breakout here at 450, we think that it goes to 500, by the next earnings period. So, that's another, 10 or 15%, from here. And that's on top of a 20% position that we bought correctly into position. Now, here's a good one that everybody's talking about and waiting for, NVIDIA. So, we have chronicled this, and, they're totally sold out. The stock came in yesterday as the Biden administration said, we're not going to allow any AI chips to be shipped to China. And that put a little bit of pressure, particularly on the non-leaders. But that's as far as it dropped. And again, the stock went up on a down tape today. And this is picture perfect. So earnings are in 8 days. We'll probably hold this into earnings because we bought it. Wes, where did we buy this? Right here, huh? Right there?
I'm
One.
trying to remember. Yeah,
We bought
think
it back
so.
right here,
Yeah.
I think. Right? Yeah.
That's October, early October, right? Yeah, I think so.
Yeah, I think that's where we
I
bought
think
it
we
back.
may have added to it.
Yeah, back. We bought it back and added to it as well. And anyway, it's it's broken out. So breaking out here on a good number, and we know they're sold out. And if they don't ship chips to China, you would think it would have dropped more. But it's we view it as being discounted. And of course, this has been the leading stock in the market over the last 3 years. And based on the earnings projections, huge earnings projections, both in 2025, earnings are going to be up another 119%, for another 45% projected in 2026. And this is going to probably be light. They're going to probably up and raise their numbers the way that they've done just about every quarter, over the last, the last couple of years. So when they miss, or if they guide down, then the parties can probably be over. But we think the runway, they're the dominant factor in AI in terms of building out and the capital expenditures by the hyperscalers like Meta, Amazon, Google, and so forth. That we think we think that probably looking out in late 2025 or early 2026, you'll get a parabolic move like you had like in Qualcomm. And that's going to be your exit strategy when it's just the numbers are so incredible. But the stock is going to peak on peak numbers. These are not peak numbers if earnings are projected to be up 119% next year and then another 45% in 2026. That's not even close to having peak numbers. Now you can see you can have gyrations, in between these quarters. And as market participants buy and sell the stock. So that's why you've got to use, strict tactical, technical entry points when you put in, when you add your, when you enter in and know when to, exit the position. But we think you've got a long runway, in this particular stock. Again, Tesla, we bought Tesla back. We bought it that day right here that we profiled on Twitter. We ended up selling half, going into this pullback here. We bought it back on this date right there, and then we pressed it right there. That's how we handled it. And, you know, from a leading stock, if you're not in this position, and look at the accumulation, see, that's, you know, that's what's great, you know, about MarketSmith, these charts, so you can see them clearly. You know,
I'm sorry,
can
I ask you a
yeah, go
quick,
ahead. Yeah.
so what amount of the position did you put on the first turn, and then the second turn? How much of the position did you finish it off? Like, would it be 50-50, 30-70?
Yeah. Wes, what did we buy when we,
Yeah. So
right there?
on that earnings gap up, you know, I think we put on 7.5
Yeah.
at the open on that day one. When it hit 245, I think our buy point originally on that pullback, we sold a third, so it went down to a 5% position. And then on the election day where that gap up is, we added back the full position to 7.5. So we sold a little bit as it was, you know, getting into that gap that, you know, it was coming into the low of the earnings day. We sold a little bit, you know, sure, election jitters, all that stuff. And then, you know, fortunately, you know, we kept some on there, and it was easy for us to buy the open. We may have even bought it pre-market on election day too, just
Yeah.
because, you know, there's a lot of volume. It's pretty easy to do pre-market. So that's why it was easy for us to say, all right, we're getting back in this. You know, the weight was lifted off. You could see that it was one of the top movers pre-market with those election results.
So
Great,
we're currently in a 7.5% position, and we've got 13 positions out there in this, you know, portfolio. And we would, like, right here, if this stock comes in tomorrow and turns up, we would, you know, Wes and I are talking about going to 10%, you know, in the position, but it's got to be, you know, this isn't your perfect stock coming out of a perfect base. It's an alternative entry. It's an alternative setup. You know, Minervini would never touch, you know, this type of setup, but this is a different type of setup for us where we like to trade earnings gaps. And because earnings gaps are launching phases for very, very strong stocks, we have found for us, earnings gaps typically go higher. So you get an earnings gaps on big volume, just like that. That's confirmation, you know, with that volume coming in, that's confirmation for us. And we're strictly following the money. We're not following the analysts. We're not following CNBC. We're looking at it based on how we interpret the market action. And so we don't care what anybody's saying, good or bad. We're seeing that there's huge accumulation, Fidelity and all the other funds out there, and buy side and sell side guys, or that's how they're buying. We know what institutional footprints look like.
Roy, can you please open monthly chart for Tesla?
Yeah, sure. So there's the breakout there on the monthly that we're seeing, right? You can see that. So, you know, it can certainly come in, but it doesn't get good. This is your confirmation to buy this month. See, there's a breakout, and there's the breakout, and the breakout may not hold, but, you know, we're in it and we've got a profit. But the real move takes place right there when it crosses 400. So you cross 400 and it's on its way to 1,000. So now that may happen in 3 months. It may happen in, you know, 2 years. But it's setting up. This was a buy point when you're looking at the monthly, weekly, and the daily. But the real move doesn't take place until you get into all-time high territory. The way it got into all-time high territory, see right there, you know, on the green, you know, this green line breakout after going sideways for 3 years, and then the breakout, that's the move right there, you know. And, you know, we don't, you know, we have no idea where it's going to go. If you're going to have a move where it goes from up tenfold, doubtful, but, you know, anything can happen. We don't know what the earnings projections are going to be, new product innovation. We don't know how autonomous driving is, how that's going to be how that's going to impact the consumer, but it's going to probably impact our world, and they are the leader. We don't know how humanoid, robotics is going to, impact us as a society, as a culture. But they've got innovative products out there, in the battery storage area, in the energy area, in the solar area, and so forth. So this is one of the quote favorite stocks that retail investors have followed, certainly over the last 5 to 10 years because it made people rich on that move there from 30 to 300. So, rarely do you have a replay of the same types of moves. But again, look, when you go back and you look at MSTR, it took over 20 years to brand itself, to change its focus, to bring it to where it's trading currently.
Thank you.
Intuitive search. Oh, by the way, and see, look at this Palantir. See, there's a green line breakout. So the move, from a technical analysis perspective, you take that move, that drop that was from 50 to basically 5, and then you translate that from that $45 from 50 to $45 up. That's where we come up with a $95 price target. And that's just on the next leg up. That's on the next leg up. But these stocks that have the power to break into new high territory after going sideways for several years. Look, this has been almost 4 years. And that's why this breakout is so powerful. And, we think it's doubtful, based on with the earnings report that they just came out with, we think it's doubtful that you'll recheck this breakout. So look how powerful. That's where we bought right there on the open. That's where we pressed our position right there on the open. And if it comes back to the 10-day, we would be interested, in adding to our position, from 7.5 to 10% and so forth. But, it's probably not going to, if the market goes sideways, it can come into the 10-day, but it's likely that it will come in just to the 5-day ESA, whatever that is. So, you can see the overriding theme here is all these, the majority of these stocks are making 52-week highs. We have a position here in DoorDash. We did hold it into the number. We were rewarded, hold it into the number, and it's turning into a great winner for us. And, the earnings that were just reported right here. So, when these stocks break out, guys, on the quarter, on the number, conservatively, I've found that you can, we're just looking to make 20% over the next 13 weeks into the next earnings, to the next earnings quarter. So, 20% from right here, that suggests the stocks can be, north of 200 and so forth. So, those are some things to keep in mind. But, just following the institutional money, that's important. This Reddit, we bought it right there. Where we did not hold this into the number. See, look how you were rewarded if you were holding it into the number. But again, earlier tonight I showed you 2 stocks that we got blown up in, down 20%, holding it into the number, and they look perfect. Just like this looked perfect going into the number as well. And then boom, it worked. And, it's, there's so many that I could show you where, again, it's 50-50. You get some right, some wrong. So that's an individual decision again, hedging or not hedging, de-risking, or not de-risking. That's all an individual decision. But, this RDDT, Reddit, very, very strong number, came in, turned. This has the makings and looking like a big leader, over the next, the next several quarters. So you had this stock that turned down from a 52-week high. Look how tight that got today. We would expect this stock to come to the 10-day, but if it doesn't even come to the 10-day, that's going to show you how strong it is. And again, we just bought it right here after the quarter and without any risk of buying it ahead of the quarter. And, we're up in this position, I don't know, 15, 20%, right now. And we didn't even have to hold it into the quarter. Okay, this is one we just bought, the last, few days. So we bought it. We bought it right there after the quarter. Look at the earnings results, 999%. Revenue growth, 200%. Now, this is in the AI chip area. And so maybe that had something to do with the stock dropping, after when the news came out about the Biden team, it was out there. And so the stock came in. If this is a leader, this stock, and I bought more of this today on this pullback. If it's going to really work, it should find support right here at the 10-day and again turn up. And again, the move is, just calculate the move that you're looking for is $120 by the next earnings report. And so that's 30% from right here if it holds this pullback, right here that we're looking at. So what brings you, what got you on board were the powerful earnings and revenue growth. You can see triple digit numbers. And that's how O'Neill made the majority of his fortune in stocks that had these types of numbers. And it was an IPO that really got trounced. And we get, you could look at this and say, man, I got into it late. And certainly when you go back and you look, this was clearly institutional buying, right there. And that was really your signal to buy right there at 60. And anyway, we bought it because, maybe we were concerned about the market. Maybe we were concerned about the earnings coming up. But that now you have the all clear there, and then it just becomes execution in terms of a textbook strategy in terms of, well, how do you enter? And I guess what I wanted to again share with you guys mostly is over the course of my career, over 37 years, I have found that you buy stocks that report great numbers. They don't necessarily have to be great numbers, but they have to have a great reaction. Spotify didn't have a great number tonight, and the stock's up $30. But what it did have great margins. So the market focused on, and the market investors, whoever is buying the stock, they're focusing on margins, not not necessarily this quarter's number. So you have to look at the reaction to the number, and if the reaction is good, those are the stocks that you should go and put those on your watch list. And I've got two more stocks, and then we'll open it up. And these are the stocks that we have in our swing trading account. Currently we're 100% invested. I have a couple more names, and this mirrors. We started doing this in January, which mirrors my money, my actual account, and which is more aggressive, but very, very tighter risk control, where where I hit the exit button, a lot quicker, and book the profits, and I'm just more aggressive. But that's a real that just happens to be mirroring my account. And we own Roblox and this RBRK. And this RB right here had a great response to the number right there. and we're in this stock with like a partial position. I'm looking for this to see if it'll pull back to the 10-day to add a little bit more. So far, it hasn't. But there's your volume signature breakout right there. And this is what, for us, that is the golden signal right there, where the stock goes up over 10% in price, on volume up 300% over the 50-day average. And we're constantly searching for those, because those are the ones, and those that are at 52-week highs are even more blessed. Those are the ones that work, even better. And the last one that we happen to own is RBLK. Or let me see.
You're thinking of rubric, RBRK?
Yeah. I am RBRK. I was confusing with RBLK, Rocket Labs tonight. They reported
Yeah.
RB. And this is picture perfect too. And we have a partial position here. And this is a security enterprise company, and that's in the cloud. This has been, in the security area, it's been littered with, Palo Alto Networks, CrowdStrike. Fortinet just broke out, and which is on our focus list. We're watching it, but it's extended now. But this has got great action because it's at 52-week highs. Earnings are in 23 days, so you have the potential to, have some profits. I mean, clearly, like the perfect time to buy was like right there on that 40 area. And I think we bought it, like we initiated the position like right there during, the last 4 to 5 days, right the election, right there at the election, just to get it on, because, it has the look of a major new leader technically. So a couple of stocks, guys, and we totally missed Kava. This is like you're going to have congratulations for those that are in it. I mean, this is along with Nvidia, has been like the poster child, and you had ample opportunity to buy it on this early entry right there. There's the early entry. There's your buy point right there, that day right there. I have no idea why we didn't buy it. We let it pass, missed it. And, you're going to find, over the course of the year, if you're really following the market closely, you're going to find a few of these that you missed. But, if you owned it, you would have been shaken out here. But then when it came back and made new highs, you had another opportunity to buy, right there, crossing back into, all-time high territory. But that was right before the earnings, which we certainly would not have done. And again, they have a blowout quarter right now. And congratulations, probably a lot of you on this call own this stock. So, well done. And, if we're not in it, we certainly couldn't initiate it right before the earnings quarter, because, CMG didn't have a good number. Wingstop, that's their earnings report. So Kava is in a league of its own. And it's one of these things where strong momentum leads to stronger momentum. There's the earnings power. And you did have an opportunity where, there's the earnings power and then the pullback. So, a number of these stocks that you're following and looking at, and again, that we're talking about, like, we mentioned, A-Lab, those are the setups that you're going to want to look at. Those are the ones that you want to look at. So look at the ones that come back, that had a great response to the earnings period. Those are the ones that you want to take a look at. And Flutter reported we were out of this position going into the number, and this stock's up 7 after market. So this is, very excellent response. I mean, a good response, it's only up 3%. So I don't know how that's going to, that's not a very powerful move, but it is, technically it is breaking out here above this pivot right there at 252.84. So that's something that hit the screen, tonight. And let me see. We did take we did take a position in this today. Upstart, there's the earnings. You had a powerful move here on earnings, and then the stock we didn't buy. Trader Lion, Richard Moglen, actually, and I posted this on my Twitter feed, had a great trade here where he made 17%. He bought it on the opening, right at the opening, sold it with the 17% gain. Then it reversed yesterday. They announced a convertible today, and this would normally, with this gap down, this would normally, we would pass on something like this. However, the numbers are good. The guidance was good in terms of future. They are in the AI area, as you guys know, and they presumably do a better job than FICO in terms of making credit decisions using data inputs using AI. So we did buy this. We bought this perfectly off the low, and we were watching this thing intraday, and we bought this stock like right in here. Thinking this is overdone. Down from 85 to 65 just because of convertible. So we think this stock should power ahead. The next couple of days here, based on the huge move, the volume explosion, the guidance raised, and so forth. And we also are watching Duolingo. They had a really good earnings report. And there's the earnings were up 600%. And you can see the breakout, the market, it squatted on the market breakout. And they're a good response to earnings. Great revenue growth, great triple-digit earnings growth. So this is something that we're paying close attention to right now that, that you guys should, follow, take a look at. Coast, they've got the technology in restaurants where you order and, where you order. They also have a billing and payroll system and so forth. And they really have the best technology in the restaurant sector we've read. And they had a really good response to earnings up 178%. See, this is, typically what you want to see. This is how you find these, potential monsters through, CANSLIM criteria, triple digit numbers, but I can show you plenty that don't work. And, but the majority of the stocks that we see that were working, they're either strong, they're very strong from a technical position, first of all. And then on top of that, like a cherry on top, you want to see you want to see the great fundamental information. But look at the volume here. Look at the wall of blue. That's the accumulation. And when that happens, that's rare that you have accumulation like that. Let me look at the weekly. Yeah. So if this turns out, we have, and this is, you see the big volume right here on the weekly. If we finish the week and the volume is up here at the same level, like we get 2 consecutive moves of weekly volume, we call those skyscrapers. And in just about every case, stocks that have 2 consecutive weekly volume like this that are way, way above normal, then those lead to higher stock prices higher stock prices, generally speaking, if the market cooperates. This SC, which is, the SC reported, it didn't have a great close, but it broke to a 52-week high. And again, on triple digit numbers, it had a great quarter. So it did squat. It's not like a great close, but you can't ignore the idea that it was up 10% in price, and volume was up almost 300%. So that's, follow, we think you should follow the volume, follow the price action, and avoid stocks that are making 52-week lows. Buy the stocks that are near the 52-week highs. That's where you're going to you'll find some of these, some of the monsters that we're talking about. And, this Shopify volume was up 1,000%. So this is really enormous. So, Shopify, they do the branding on Amazon. They provide the platform so that, small businesses across the world and across our country, they can sell their brand, their brand and merchandise, on Amazon. They make it easy. But look at the volume, look at the explosion, 1,000%. And, when I see a move like this, stocks up 20% and volumes up like this, it typically leads to a 20 to 50% gain by the next earnings report. So a big company, $140 billion, that's institutions buying right there. So they traded 63 million shares where volume's normally 5 million, 10 times. And you look at this, guys, you look at this and you say, man, it's up, stock's up $20. I won't touch it. But this is the kind of stock with volume like that that can go from 108 to 150 by the next earnings quarter if the market cooperates. So follow the volume. This is where the individual's, leadership is. And the last thing, and I'll turn it over to you guys, is
Hey Roy, sorry.
go
While
ahead.
you are in Shopify, it's Amit.
Yes.
Could we look at the weekly and monthly? Because Shopify had this previous, all-time highs, and then see how much it fell down.
Yeah.
And same thing with Upstart.
Yeah.
So sometimes with the momentum, it goes up very fast, and then it also falls back. So
Yeah. There's no guarantee. And I can just tell you, I can show you many, and normally it's tough to come back after you see this is a leading stock coming out of COVID, but then the correction was humongous. That's why I don't typically, I forget, I normally don't buy these stocks when they have, when they're far under their 52-week, when they're under their 52-week highs, when they're way under it. But, when the stock comes back and makes a 52-week high, and, when you go back like a year and a half, this little line right here shows you a year and a half back. Typically, supply from a year and a half, if you can get over that, you can dismiss in many cases all this distribution that took place here. It's it's in a new uptrend. It's been a year and a half. You're way over. The price is higher than it was a year and a half. So all these guys that bought it a year and a half are profitable. So that's just that's my experience over time. There's no guarantee that this could flop tomorrow. But I'm just telling you that from my experience, when you're seeing this type of action, and we're just in, we're in Tuesday. We have 3 more days. You could, we'll see how the stock ends. But this is, it's got the characteristics right now of today. And if I'm watching it, wait to see if it'll come in and then turn back up. And then you've got a tight place to put your stop. Regardless, none of these may work. But we're just sharing with you, what my experience has been. But this isn't, by no means is this a lock. Is any of this a guarantee? I'm just showing you the best way from a professional risk standpoint to play it. So let it, it may come in like it read it. So, but you just have it on your watch list. It may come in one day. It may not take out today's low. It may turn up right there. Just watch it because it's got the ingredients that what I've seen before. to make, to have a, to make a 20%, move. And, I make no qualms that, it's a pure guess. I don't know if it goes to 120, 150, 100 or 200, but I'm just showing you that's identifying that volume accumulation. That tells me something. And I key in on that every single day, looking at volume.
Hey Roy, this was a golden nugget right here when you said some of these gap ups,
Yeah.
Run up 20 to 50%. Other than the volume, that's what is it, 1,000% and 20% gap up basically in the day. Are these basically the ingredients and the big numbers there on the report? Are these pretty much the ingredients, or there's something more that tells us this could potentially go 20 to 50% up? And by when 20 to 50% up? Are you talking to the next quarter type of thing?
Okay, if you'll indulge me, let me give you like 5 or 6 examples. Okay, and also I run this screen, and I saw Joseph. Joseph used to tweet a lot of this 10-300 that I like to identify stocks that are up 10% in price and volume up 300%. So I have this on my screener, and so every day I can see these stocks that are up 10% in price, that go up where volume's greater than 300%. I have found over my career, let me show you some examples of what I'm talking about. Okay, and that was you just brought me back, and I played all these. And let me just show you. So this is where Amazon, and on 10, 20, and write these down, guys, and you can go back and study these for yourself. 2007. Let me see. Amazon. Change this. Oh, 17. Let me see, 2, 10. Let me get this right. And 1027. Let me see this. And I've written down a number of these just to keep them here. Shoot, I can't read my own writing. 1020. Okay, there's Amazon, guys. Okay, there's the breakout to 52 highs. There's the volume right there. So I bought it that day. Okay, now what does it look like? Subsequently after that. Let me change it to. Let me go out a year. And 1027. There it was. See right there, guys. There's the buy point. So that was 1,200. There's the move from 1,000 to 2,000. Take a look at Google. 421.05. GOOGL. This is, for me, this was the biggest winner that I've ever been in, where back in 2007, I had like 1.7 million in one stock, and it was Google. And you typically remember that and write that stuff down. So Google was 422.05. 422, 2005, right there. Coming in, so this was an IPO. So you had the IPO, had no idea, but this was and I also bought it right here on this IPO breakout at like taking into going into all-time high territory, coming out of this IPO base. But there's where it broke out to 52-week high. There's the volume signature, and go back and look after that. There's the, there's this, that's where it was a year later. So you had the breakout right there, and there's the move. There's the move. Leadership stock, Netflix, and the Netflix date that I want you to focus on is 1/28/2010, 1/28/2010. Oops, got wrong. Stop. NFLX. The breakout date that it was up 10% in price on big volume. 01/28/2010. There's the breakout, guys. So there's the breakout right there. And so that's what got it, got my attention. Well, what happened with Netflix? Let's go out, 6 months later. Zero 6. Oops. 6. See, there was the breakout, guys. See, there's your double, up 100%. In the next, 6 months, leading stock. And so, look, once it just came into the 10-day, got tight, and then you had that earnings drift. And then, earnings drift, you had another quarter, stop. There's a double right there. Apple, 1/25/2012. AAPL, 1/25/2012. There's a breakout, guys. See, on volume at a 52-week high right there. Where was it? 6 months later. 6. There's the breakout, guys. There's your trade right there. So, I could go on and on and on. Tesla, 10/24/2019. PSLA. And, the reason that I have this down is like, who's going to be, and NVIDIA, of course, was on this list. Who's going to be the next NVIDIA? SMCI had that breakout when they reported that great number. And that's one that we happened to miss, but it had that same signature. And Tesla was 10/24/2019, 10/24/2019. So that's the breakout. 10/24/2019, 10/24/2019. See, there's your, Meta is a great one. Meta was great too. So, it was Facebook at the time. So there's the breakout, see, on volume. So you had all this overhead, but this is what really recently got us our attention in Tesla, because it wasn't at 52-week highs. See, guys, it wasn't at 52-week highs, but there's the volume signature, and you have this powerful, powerful move where this, the stock's up 17%. Volume's up 300%. That's the signature that Wes and I employ, and we're looking at that every day to see, what hits the screen. What are the institutions buying? And the last one, let me pull up Meta, 7/25/2013. So, and the point that I'm making too, I just shared with you that most of our gains this year. And for me, in 2007, it was all Google. One stock made my whole year, 90% of it. And, this year we've had 2 stocks. We've had NVIDIA, and then we had MSTR. And so if you get the right stock and you concentrate, that's how you move the needle in terms of building wealth in your account. But again, you got to, there's a lot of debate, but this is a Neil tenet, basic tenet. You diversify, to not lose money, but you're not gonna, you're not gonna build a lot of wealth. And after doing this so many years, I'm still feel like, I still want to build wealth. I want to, just from not necessarily financial gain, but just from a scorecard standpoint. But it's great. It makes Wes and I feel great that we're making an impact for our clients anyway. As I'm sure you're making an impact in your personal situation. That's why we do this, because this is our way of paying it forward. And the last one, META 725. And so this is, I forget who asked us the question, but this is the gold nugget in my view. This is it right here. Getting those, putting the positions on, and then, and if you take a major position, you can't take a 20% hit. You've got to many times try to keep your stop, maybe 3 to 5%. If you can make a positional bet on, like, if you're doing that, like on, if you decide to do that, on an IBD or something like that, the way that we have made a positional bet, you've got to protect your downside. And this is the last one. It is 725, 2013. 725, 2000. And see, there's Meta right there. This was the most highly regarded IPO of all time when it came out, and you got crushed if you bought it. People were looking, for the next Google, okay? And it had the footprint in terms of a mass adoptive audience, a big market, but they weren't making money. And right here, that's when Zuckerberg decided to advertise. Right there, and he decided to advertise in that quarter, and for the first time you had real earnings guidance, and we know what happened from this point right here, going out a year, and based on that volume signature right there. So you got to double. So you got to double in 12 months now. During all this time, we would, I certainly didn't hold the stock during this downturn or, this downturn, but, I'm just making the point that, most of the stuff that from a swing trading perspective, you can get a move from right here to the next earnings quarter. And again, see, that's 20%. And occasionally you'll have these 50 or 100% moves like NVIDIA or like MicroStrategy. But there's the move when you have this signature. Look at that volume footprint right there, 385 million. So, from a swing trading perspective, you can make a fortune if the market environment is right and if you get that move right there. So that's a little bit of sharing in terms of, from a swing trading perspective, how you should, how we think it's reasonable to manage your position. Don't put on 20 trades trying to making 2%. Try to get be concentrated in one position and you get 20%. Try to make it, try to make it pay. Try to make it, move the needle, move the needle. You're not going to move the needle until, you have like maybe, a 7 to 10% position or more. But, you get a 10% position and you double it, or, you have a 10% position in MSTR and it goes up 200%. That's moving the needle.
Hey, Roy.
I have a couple of questions regarding the semiconductors.
Yeah, go ahead.
You have been very bullish on the NVIDIA. Even for the winning stock, it was a 140 in summer, then it fell down to 90, so which is far more than 8% loss. So question is, how would you manage the position for a winning stock? And other couple of questions I have regarding the semi. You were also very enthusiastic couple of months ago, ASML and maybe
Yeah.
ARM, but they're not anywhere near the 52-week high.
Yeah, it's on the do not it's on the restricted list. So the only two, like, and it's really come down to this. And chips or they move the economy. They are cyclical, but in AI in particular, Nvidia has a monstrous monopoly. And so we think, based on the action, you want to only buy the ones that are near 52-week highs. You don't want to buy AMD. You don't, and ASML, ASML just totally blew it. And that's, ASML shocked the market, and it shocked, just about all the chips out there. In my view, the only two semiconductor stocks that are worth owning are Nvidia and Broadcom. So that's what I would, and I like Nvidia. I like Nvidia, more than Broadcom, but this is almost $1 trillion company, and they're in the same, area, and they're very diversified in terms of their product mix, maybe even more so than Nvidia. So those, just narrow it down to the one or two leaders in the group. And there's so much great activity and innovation that's taking place. You want to save bullets for like new ideas. Like, these stocks that we've bought, that we own, they're all basically new positions. Well, they're brand new positions because we were 90% in cash. These are all brand new positions that we just put in a week ago. So that's where we think the new leadership is, and that leadership is constantly in flux. So you must, from a psychological perspective, and there's ASML. Yeah, see, that's earnings right there. So ASML looked perfect going into the number. It looked perfect. The guidance, from the last quarter, it had gone up, on, that breakout right there on big accumulation. It was at a 52-week high, and boom, it got blistered. That changed the semiconductor focus, in the last, 4 months. And that changed everything right there in terms of the outlook. So we went from as bullish as you could be to in a day only wanting to own Nvidia. And the losing stocks go lower. So forget about catch-up plays, trying to nab the bottom. This is just too hard to trade, in a declining stage for decline. And so it's important that you only buy stocks in stage 2 uptrends and avoid stocks that are in stage 4 declines. And this is clearly in a stage 4 decline. And many semiconductor stocks are in stage 4 declines. So we've lost our enthusiasm, but we've temporarily in everything but AVGO and Nvidia, and the only one that we own in Nvidia. And if Nvidia misses, what's going to hit the fan. So they're sold out. I've shared with you why we're so bullish in it. We have, I think we got a 5% position. We're probably not going to take it to 7.5. I don't think we have 7.5, but we're probably keeping it at a 5% position. And if it's a great quarter, we'll raise it, just like when it reported right there. See, and you had an opportunity to buy it right there on the quarter, on the earnings quarter, the 10-300 right there, and you got that move from right there to right there. So that's what we're looking for. We're looking for this kind of action in it. But if they miss, then what's going to hit the fan, because everybody, I mean, probably every investor on this call, has a little bit of Nvidia. and maybe a lot of NVIDIA. So that's going to change, that's going to change market psychology in a very, very negative way. And that's only in 8 days. So next week, this is everyone in the world will be watching the report here. But Jensen Huang has already said there's insane demand. They're sold out. The Blackwell's coming, which is, the latest GPU, and it should be, and it should be great. They have a history of execution. They have a history of execution. So
No, my question was, once you identify a winning stock, where would you put the stop? 10% down or no stop at all?
no, I always have we don't put in stops that the market can see, but you got to have a mental stop, and we write it down. But if you're not able to sit in front of the computer, and you don't, let me see, and you don't have a stop in, and if you must have a stop in, it's just to protect yourself if something catastrophic. The guys, who had what stop was featured on the Hindenburg report? The hospital company a week ago that got blistered. Do you guys know? Can you guys, do you remember?
Roy, it was SMCI.
No, not that. Let me see. Hindenburg.
UNHR?
Who?
UNHR, was it?
UNHR? No.
LRN?
Yeah. Who is? No, not LRN. It's a one that. Let me see. Hindenburg.
EVH.
Who?
Right?
UTHR.
UTHR?
No.
That's what I think you're after.
Avalon Health. So I can hear me.
Yeah, that's the one. Let me see. Let me find it. And
Avalon Health. EVH. I know what you're talking about.
Is that the one I'm talking about? Let me see.
PACS.
That's the one.
PACS was Hindenburg's.
Okay, that I think it might be the other one so this one got hit too, but look at that. And going into the earnings, it was the one for fraud. What was the one?
It was PACS, PACS.
Yeah, that's it. Guys, take a look at this. Okay, thank you so much. Okay, so this is, look at this stock. So this stock, and I know David Ryan got caught into that. He got caught in this one. Okay, so let me change the date here. 11/1. So this is only 10 days ago, guys. 11 days ago, 11/01. $20.24. Okay, guys, look. Okay, so it's and I don't have any earnings news here. So this stock's setting up beautifully. It's above the pivot, like it's ready to go. Setting up great, ready to go. And what happened in one? And so something like this. Look, there's it broke out on volume right here. That could have attracted your attention to it. You could have held through. You're not down 5 to 8%, held through here. You come back, it's ready to go to be a new leading stock. What happened one day later? Fraud. So, this thing dropped from 40 to 18, 22, got down 50% in the course of minutes on this Hindenburg report where they accused them of fraud. And that's what you can get. That's why you've got to have a stop in. And if you're sitting there and you've got a 10% position, you just got, you got $1 million investment portfolio, you just lost $50,000, in the course of minutes, just based on the report. So, if you're not sitting in front of your computer and something like this, you would have had a stop right there under that prior level. Just good till cancel, like right here, but I don't prefer to put them in, but if Wes and myself, we're sitting here in front of the screen 12 hours a day. So you've got to have somebody watching the screen for you, so that, that's why you pay, your financial advisor to do something like that. If you don't have a financial advisor and you do it yourself, which we highly recommend. We're not recommending you hire somebody. We're recommending you you can take control of your own financial destiny, where you're responsible. But if you're not willing to sit in front of the screen and do this every single day, you better cover your behind. But we love the idea, and we would highly recommend that you do it yourself. But many of you, you're professionals. If you're retired, you don't want to sit here and sit in front of the screen. You've got a life to live. But you must protect yourself. So always protect yourself, or have your financial advisor know that. And he can miss it too. But at least you've got a different pair of eyes, watching out for you. But never. You can't go, and you certainly can't go into an earnings report not knowing, where your exit strategy is. So, just keep that in mind. It's all about containing the blowups that are going to happen. You're going to have stuff like this that happens, and you can recover, from a 5% loss. But, what I like to do is keep my losses I'd like to keep my losses at 1 to 2% of my equity. So if I've got a 10% position in something, and again, you can look at the straddle to see what your volatility suggests that it's going to, which way the stocks can move one way or another. That's buying the put, buying the call, or pricing the put, pricing the call, the current one, the closest one, and then adding that together to give the amount of percentage increase or decrease, like that Palantir. That Palantir, as you can read my tweet, we had it going either to 35 or 49, and it went to 49. And based on the straddle. But that's why we de-risked, because we didn't want to lose more than 1 to 2% of a half a position. So so just keep that in mind. But if you get in a market environment the way we're in, a strong market environment, this is the time where you can move the needle right here, because of the secular moves that are taking place, the favorable treatment of Trump's strategies, the way the market identifies that tax cuts are coming, growth is going to accelerate. It's going to be it appears that it's going to be a very, very favorable business climate right now. That's where we're going to kick out a lot of these regulations. That's going to be more entrepreneurship, more innovation, more companies that are unencumbered by regulation and so forth. That's going to be very positive for those companies to grow. So we're in this magical moment right here. And again, look, the FFTY, or the IBD 50. Let me pull up the IBD 50, which is, we talked about this, and we get a lot of backlash talking about the FFTY, which, the IBD 50 is a better representation. Let's take a look at the IBD 50 index. And, a scenario like this only happens every, few years. And it's right upon us right now that this is the time where you can move the needle. Let me find the index. There it is. So we just took this like early entry out right here. And when you go back and you take a look here, like on the weekly, this is just breaking out this week. So this is, breaking out on big volume. And this is, this is where you're going to watch those stocks that are in the IBD 50. Now, remember the IBD 50, there's a 200% turnover and stocks come in and out of that index every single day. But there's your breakout right here. So this is the rotation. Guys, this was the biggest drop this is like equivalent to 2007, 2009, what we went through. This was horrible from this top there, from the top here and through the bear market in 2022, the base building phase, the new uptrend starting, the pullback right here, the scary pullback right there, and then the subsequent recovery, reset of this pivot and the breakout. This is extremely bullish right here. And, this is, to me, it's similar to like taking this resistance out, right here, this resistance for over 2 years. And, again, there's the year going back a year and a half. All this volume here is really insignificant because it's too far back. You're in a new uptrend right here, followed by this breakout. This is significant right here with what's happening. And the real move is going to be taking place, taking this out and then going from here. And so that's where you might have the rotation out of big cap tech to, these innovative companies, and they're going to be in the IBD 50. And, now who's in the IBD 50 now? You can just take a look and you can see, there's big turnover, but this is where the leaders are. So we own NVIDIA. DOCS had a great quarter. There's that PRCT. There's VRT that we're interested in, from the data, liquid cooling management, VRT. There's Palantir. This MCOR looks great. There's Axon that we sold going into the number. We sold this AXON. We sold this AXON like before the number, like maybe there. And then, it turned down and then the stock explodes up, to up today.
Can I ask you a question?
Up 10 today. Yeah. Yeah, go ahead.
For Exxon, what was your ideal entry, and if you could explain why or your reasons, that would be great. Thank you.
You're cutting out on me. What was the stock again? I heard what was a good
the
entry?
same one. This one. What could have been your entry here, or what was your entry, and the reasons? Or if you can explain.
There's right there to buy it on the opening. There's the perfect entry. That again, there's the day. Look, going into the number, you would never. It could have blown up on you right here. It wasn't. This stock was in a very weak position going into the number. That's why I'm saying that you never know, and so that's why I want to see more confirmation. There's the confirmation. There's the perfect entry. And again, the pullback, if you bought it on the open right there and you had plenty of time to do so, but it was up. And a lot of times they're not able, people are afraid to buy up. But when you see a stock going into new high territory on the number, and right at the open, pre-market what the volume is going to be. you should know whether or not to put the position on or not. But a lot of that has to do with the market environment. So there's your perfect entry point. The other time to add was where it came to the 21-day and probably like right there, taking that out, adding it right there, pressing it. So that's the best way of doing it. And we were in this position. We either bought it here or here. I can't remember. And we got this move out and we sold it. We sold the whole position. I think maybe that day or that day. We sold it before the election because we had taken 2 losses in Short Ninja, or we had 2 stocks, Short Ninja and the other one that dropped, whatever that one was. And so we didn't want to do the trifecta. And this went up 10 today, on the number. So again, there's your entry points, but you can make plenty of money when the market environment cooperates, getting that move right there. And it takes you got to be Sherlock. You got to do your work, do your research. And you got to keep it, have a buy list, a focus list that is update. Here's our focus list. So this is what our focus list is right now. So we've got all these stocks that are flagged have reported earnings, and there's 170 names, and on our list, and I'll take a screenshot, and I'll do it in alphabetical order.
Hey Roy, what are the filter criteria for your push EPT?
You're cutting out on me. I can't hear you.
I'm just wondering what's the screen criteria for push EPT?
I can't understand you. Can anyone? I can't hear.
I think he's trying to ask what is your criteria for this list?
Criteria for screen, I guess.
Just technicals. A lot, definitely technicals. The ones that are on the list that are flagged. I've gone through like what stocks are acting good, what stocks look good, or they're acting good after the quarter on the report, and it's a combination of many screens that I run, and I'm like it can be from the Market Smith 250, it can be from the IBD 50, it can be the top 200 composite, it can be from the IBD 85. These are all screens that I run over here. So you can see I have dozens and dozens of screens that I follow, and then I take them and I take that list and cull it down to what looks good. So it's this is the I guess the experience that so I just take all that, go through it, and okay, this passes my eye test. This passes my eye test. This passes my eye test. And so that's what makes this list. So let me go down and I'll show you the rest in the list so you can do a screenshot. So here's another part. This is to 100, and then the next page. So this is a combination of it's qualitative and quantitative, and so this is a list that I've culled personally, and it doesn't mean that I won't buy anything off this list, but typically it's going to come. This is from the work that I do over the weekend and through the week, at night, and typically it's got to be on this list. It's got to be on this list for me.
Hey,
Do you have a list of the ones that gapped up 10% on 300% volume out of these gappers, like over the past few weeks, like A-Lab or PLNTR, APP, all of these big ones?
I
have a shop now.
I'll show you like sort of what I don't have that. I mean, I know what these are pretty much in my head. Like, for example, like what's got my attention from a that I don't own, and just knowing what the action was, and I'll show you. Like this firm had good action after the quarter. Let me change. Oh, I need to change the date. And this shook you out. This is a great shakeout. So it had a really good response to the quarter. That's interesting to me. This A-Lab, which we own, we've already gone over that. App Lovin', this is other than Kava. These are the two stocks that many of you may own and that could have changed your life. And I missed Kava and I missed App Lovin'. And I should not have missed it. And there's App Lovin', great move there.
Hey, Roy, I was going to ask you something on that same subject. Kind of from a psychological or a mindset thing. We're kind of in an environment where you can't buy it all. How do you make peace with missing App and because I'm missing tons of them and it's driving me crazy.
It's going to happen, and
some of that's buying power too, right? You're fully invested. You don't have any money left.
It's the old pigs in the trough situation. So I'm fully invested. I've got to sell something to buy something, and the only way that it's got to look better for you to push your weakest performer. That's the best way of doing it. But I don't want to, like, for example, I don't want to use buying power and get off. We've got UPRO 3 times the S&P. That's an easy way of getting exposure, and we want to keep that exposure there because then it's just market risk, not individual stock risk. But the best way to get exposure immediately is in these indexes, and the way that you do it to beat the indexes, you got to have a leverage index. But I have found that you buy the leverage ones as soon as there's a catalyst and something changes, and then come out of that. Say if you make a 20% gain there, there's going to be these other stocks that are going to do better than the indexes. But it's going to be tough to beat twice the indexes. It's very hard to do 2 times, the S&P, or 2 times the Nasdaq in a bull market. So, it's got to be, where are you in the market cycle? Yeah, go ahead. Yeah, I can't.
What are you looking for?
I didn't get it.
Meanwhile,
hey, Roy, on App Lovin', since this meets the 10-300, but isn't it overextended?
Yeah. Yes.
When would you, like, at what level would you buy if it retraces back to, say, a 10 or a 21?
Yeah, I probably wouldn't buy it. I probably wouldn't buy it. For a stock that goes from 82 to 300, that's pretty climactic in my view. And no, they tried to take it. It should have come into the 10-day. I mean, on a stock like this, I would never buy it unless it came in at least to the 10-day. But it's so extended. But it's because it's that and Kava are the 2 leading stocks in the market. That institutions own. People got rich here, and there's the 100. There's a move from 100 to 300. That's the kind of move that potentially you can get like in an MSTR. I just missed App Lovin'. You just have to get your mindset right, knowing that you're going to miss some of these. SMCI had everything that I was looking for from this move, and right there to right there, there's a stock that went. You could have bought. There's a 10-300 right there at $35, 30 to 120. In 60 days. And I actually bought this personally and sold it with the 20% gain the second day, just because I made 20, I moved the needle 20% in equity in a big position in one day. And look at what I left on the table. You know, I had a triple there so you miss some of these. And there was no reason to sell it being up 20%. I mean, I've been doing this a long time, but I have no, with the volume right there, and I have no idea why I didn't hold it for this move here. And then it would just up until you had that big reversal there. You know, you're going to just miss some of these.
Right.
What is your outlook on the GLP drug maker like Lilly, Viking, or Novo?
We owned, you know, if you follow my tweets, we bought both of these. We kept Lilly and sold NVO because NVO was not performing as good. And for whatever reason, Lilly missed. So they missed the quarter. And so it's not on our list. So they missed the report. They missed the earnings report right there. It would have to make new highs for me to get interested in it. And this was only the second quarter that they sold Majarno and Wegovy, or Novo does Ozempic, and you know there's you know just the weight loss part. I think Lilly's is Wegovy, and I forget what Ozempic's is. Anyway, so bad technical action, and there's competition. You know, that's why HIMS and you know, you have competing, you know, that's why this HIMS has popped up, because they're competitors at you know, selling the GLP-1 compound at a 70% savings than Lilly and Norvo. So it's, you know, it's these stocks where you have the government get involved, where they can price these drugs differently. That's you know, it's biotechs are tough. Biotechnology stocks are tough.
Do you invest something like as a venture capitalist, like in the Viking or Structured Therapeutics, where they don't have any drugs, but you are kind of on a hope?
No, I don't. Okay. I don't. It's, you know, maybe if it's public, I think the only way for you to make real money in these is like really know what you have. And I have no idea what these companies have, if they're going to get FDA approval, if they're going to. So I would never, from a venture capital perspective, you know, I'm not going to move the needle. I'm not, and you know, I prefer to put more money in something that I have conviction in, and then, and I'd rather be wrong than have money in something that I have no conviction in and be right. I'm not going to put enough money in it to move the needle. I mean, you know, I mean, it's not, I mean, you know, if you can't put 50 to 100 grand in something, why bother? You know, so, you know, and I'm not going to put 100 grand in something that I have no clue of what they do. And, you know, and it blows up because, you know, you get a couple of those and that defeats the purpose, you know, because they drop 50%, you know, overnight. So, you know, I don't want to put 100K in something. And I mean, I don't think, for me, it's not meaningful unless you put 250K in something. So, you know, I might put, you know, I might have $1 million in Bitcoin in a Bitcoin position. I might put 10 grand here. Why bother? You know, it's like, why, that's like, you know, why buy options if you can't put 100K in in an option position?
So now election is over. So what is your outlook for the healthcare sector? Which segment of the healthcare would you focus on?
Well, the ones like ISRG, we own this and we just bought it right here. It broke out on the quarter. Now, you know, they're coming out with the latest Da Vinci machine, and this has got great action. We bought it right here, breaking this downtrend line about a week ago. And so this is the one that we own. So we think it's the leader. We think it's and if you read the company's earnings call, they're, the launching is taking place right now. It's going to go throughout 2025. And, this has got a monopoly on, the surgical robots system. So in our view, this is a leader, and it's got liquidity. This is the one that we've selected in that area. So in terms of, drugs, in terms of hospitals, in terms of, from the medical field, it's not my expertise. And, I can't make a macro decision on something like that, but I can make a micro decision on, okay, this stock had great numbers. They were launching the machine. The guidance is great. It's at a 52-week high. I can make a judgment on that.
ISRG has a competitor, this Procept Robotic, PRCT.
Not really. Not really. This is a tiny company. Look, they're doing $58 million, and it did break out. That's no competitor. It's market cap of $5 billion, and ISRG, this is no competition, and 191 billion. So you got $5 billion versus a company that's 200 billion. There's no competition there. But it did hit the screen, and there's anything can happen. And you did have this nice 10-300 right there. And so this is a tiny company with a tiny product. And I don't, maybe they make it, maybe they don't, but they sold more units, but it is tiny. It's no competition in the marketplace, really.
Roy, what do you think about Hims and Hers?
Maybe. This is
if you go on weekly, you see those blue skyscrapers from the volume standpoint. They look pretty. This is kind of a wild stock, but it almost crossed all-time high, right?
This might work. I like that. I definitely like the action. Not in it, but this is telling you that this is competition. This is competition, and they're also doing. Look at 400. Look at the growth there. Revenue growth 246, 278, 315, 401. So you've got logical stepped up increase in earnings and revenues. And the stock is corroborating the leadership. But it's tricky. Again, it's in that macro field where this could be big. This could be big. On the other hand, but the market's big, and people want to save money and they did. I lost a lot of weight. You can look at my face and then look at my Twitter or my Twitter picture. You can see the difference. I've lost a ton of weight on Lilly's drug, Mounjaro, but it's $1,250 a month, and the insurance doesn't pay for it. So, and do you want to pay $1,250 a month, or do you want to pay $200 a month? And I've already lost the weight, and so, but I need to get on some kind of regimen to just stay where I am. And I might this might make a lot of sense for many Americans across this obese nation of ours.
I think Hims and Hers work against NVO, Novo Nordisk, because of not with the Lilly. So because the way they make money is that where the shortage is, Novo Nordisk drug is on the shortage list, so that's what they can market it.
Okay. Well, you got a horrible chart pattern right there on NVO, and Lilly's not far behind. I find it very interesting that only after 2 quarters of they spent billions of dollars developing this, and they only have 2 quarters before the government steps in, and I don't get it. Where these companies spend billions of dollars, and the government talks about pricing and all that, but they've got to make the return on their investment. They've got to make their money back, and it's tough being a drug company.
It's kind of a loophole with the hims and her. They're exploiting the loophole. So
yeah, they are. Yes, and I mean, if you can exploit the loophole, just like saving taxes, if you're doing it legal, exploit, you're being smart. Exploit the loophole. It's just how long will the loophole be there? You've always got to contend with that, and you have to be able to sleep at night as well. But this is the kind of, I mean, this is, this could go from 30 to 100, and yeah, I like, again, I like the idea, but I don't like the political situation, but it can work.
Roy,
Hey,
can I
Roy, can I
Yes.
ask a question of other area of the market? The TPL, can you take a look at that stock, Texas Public Pacific Land?
TPL.
Yep.
Wow, great stock. Congratulations. It's normally, normally when people on the call bring up something like this that we're not following, they own it. And I mean, this thing looks fabulous, looks great. You can see what they do. They sell leases. Trump's can drill, baby, drill. And this is corroborating kind of what's going on. This looks like a growth stock. This looks like a rocket ship. It looks fantastic. So I mean, this stock looks great. And small float, 7.8 million shares. I've read about this stock in the past, but would be tough to buy. It's got look at how it's hugged the 10-day. So an exit point, if I own something like this, it would be probably I would, and I like to give like a stock like this that you think you've got a monster in, and you've clearly got a double in it. I give it like 2 days below the 21-day. That's what I like to defer to before I would sell it, But that's, and that 21-day, of course, is moving up. That's how I would handle something like this, because, I mean, what's it look like on the weekly and monthly? Man, it looks great. I mean, you can get moves like this, occasionally in stocks that aren't normal growth stocks, just because they're in the right spot at the right time. This is a stock. Look, the earnings weren't great, but the market's not focusing on that. It's focusing on drill, baby, drill. So, I mean, you got a tiger by the tail here based on this action here. And, I'm just off the top of my head, this is something that can go from, it was just 1,000 a month ago. It looks like it's headed straight to 2,000. It looks great. So, so I would hold on, protect my gain, but I'd try to give it some room, because, it could go to 3,000 over the next 2 years, as Trump undoubtedly is going to do what he says he's going to do. Don't think Trump's not going to clear the border up. I mean, he can do exactly what his mandate was. And so, this stock is telling you something that's going on here. This is a very powerful situation. Congratulations on this one.
Hey, Roy, there is a similar stock called WLFC.
Yeah. Willis Lease.
But this is a different, they do leasing of aircraft engines.
Yeah.
I mean, it's volatile, but look at it's stable and high growth.
Yep. And look at that move from 100 to 200. Now you can see, I mean, and see, and the lady that just had the other stock we looked at. See, this is what when you get a stock in an uptrend like this, and before I took a look at this, remember I said the blue line's the 21-day, and I like to give it 2 days below the 21-day. That's where my stop would be. There's 1 day. It like, okay, 1 day they tried to shake you out, came all the way back. That's it. See, it hasn't even, so there's that when you get a move like in an uptrend like this and you're holding on for a longer gain. And I try, again, what I've tried to articulate tonight is try to hang on for these gains where you can make 20%. And then there you make the decision whether or not to exit. But when you get in that uptrend like that, you have to make a decision. Like we sold this GEV today because you had, look at this extension right here. And so this is one that we sold. I think we bought it back, I think right here. Oh, yeah, right here. We sold it right there on the reversal from 200 to 240 or something like that. So on that reversal, we sold it there. We're wrong. No reason to sell it. Bought it back on that right there on that breakout. And then we bought it right there. And then you can see it extending right there. And we sold it on this abnormal action on volume today because I didn't want it to go to the 21-day. And again, what I just told you, 2 days below the 21-day, and that's really giving a lot back. And so, we took the 23% right here because of this action right there. So, you have to decide and interpret the action and, determine and this stock might be right even long term, over the next 12 months, but I just didn't want to ride it from 350 to 300, so that's why we sold it, today. So that's it. Again, this is it's an art. This is an art and it's an individual decision. But hopefully I'm sharing with you like real life examples that, that someone has seen everything, done everything, made all the mistakes, made all the many right choices as well, but has seen just everything that you can possibly imagine. And so it's, so that's, everybody's different. So, keep that in mind. And, Mark Minervini and I, we disagree all the time, but we agree in many things as well. So, so there's a lot, there's a lot of ways of, skinning the cat. And it doesn't mean that your way's not right or his way's not wrong. It's just a different approach. But, hopefully I've given you some information tonight that you can feed off of, that you can do your own work, do your own research, learn from, and see what's possible, and not just not just hype. There are a lot of people and hypesters, hucksters on Twitter, on social media, but you can find people that give you like really great advice too, like from Richard Mogul and Trader Lion. And IBD's information and products. They're on a YouTube channel and they give a great overview of the market every day. I would encourage you to listen to that. And Jim Ropel's fantastic. And he and we're in like alignment in many cases. In many cases, and we are following many different, many of the same types of stocks and leadership stocks as well. So there are a few people to follow. If you get on Twitter enough and move around, you'll see who the guys that really have credibility, and we believe that we're one of those people that share what we're doing, the wins and the losses, to make it real for people to share, our knowledge so that other people might prosper. So guys, with that, I'm going to call it a night. It's 10 o'clock. My
Could I
voice
ask
is
a quick question
going.
before you go?
Yeah,
On
go
the
ahead.
Pro, if I can take you back on that UPRO position you guys took, I believe you said on the turn last week after the election. So I wanted to ask what position size wise, what kind of position size you guys have of the portfolio, and like if it's let's say 10% position, do you consider that 30 since it's triple leverage? Lastly, what sell rule do you have for that? Is it like a couple of months? Of course, it's violation.
We would never let this profit turn into a loss.
Yeah.
So that right now, there's no way on the face of the planet, barring a black swan event, that we would let this turn into a loss. But we got aggressive, and we do have a 10% position in UPRO, PQQQ. So that's 20, and that's times 3, that's 60. And we did put a position on UWM on that day, right? If I can, let me see. We have a 5% position in our swing trading accounts right there. And normally I post this on Twitter, but I didn't get around to it. We're just too swamped. And but we have a 5% here, and I'm looking to move it up. And again, I was trying to take a look at this. And so if we have this rotation, we have this rotation, and let me see. So we have the IWM, but take a look at the IWM. Okay, and I was trying to draw this trend line, and I got frustrated because I couldn't draw it. There's the breakout. See this? There's the monthly breakout right here. Okay, so this actually is going to let me do it. Okay, so there's the breakout. See right here? Look, guys, this has been 4 years. 4 years. And you got a 4-year breakout, and you're going to get at least there to there. And more than likely, you're going to get there to there. That's a 2-year run. There's a 2-year run, guys, where, you got a 2-year run. Right here, when you broke out, again, you had, from the breakout, you had a solid year run. So here's the breakout. I think you get a solid year run. And that's why, regardless of all these individual stocks that we're talking about, if the market conditions are favorable, which we believe that it's setting up that they're favorable, and that there's going to be a lot of this rotation. We looked at the the IBD 50, and so that's sort of where the heat is going to be, and it's highly rotational, but that's where the heat is. But this is significant, a 4-year breakout. Remember, parallel. Remember when Tesla broke out for going sideways for 4 years? Then you had that massive move, and so you get occasionally you get moves like this, and this is significant when you get that type of action. So so guys, we'll send this out. We'll send this out tomorrow to you with the slide deck. Thank you so much for attending. Wes and I are delighted to share our time with you. We hope that you find it, interesting, and we hope that you find it useful and that it makes an impact in your financial life and your financial destiny. And we hope that you can move the needle. Like right here, we're at a great moment. Protect the downside, but this can get a lot better than you can imagine right here. It could turn into a 1999 model, 1999 to 2000. That was a great period of time. And, coming out of this bear market that we had, you'll be astounded at what you can accomplish in a good market, because we've struggled. It's been a struggle, while the market's been in this choppy downtrend for, the last couple of years, and it's just improving now. So go get it. Go get them. Thanks for attending, and we hope to see you next month.
Thanks, Roy. Have a good night. Bye.
Thank
Thank you, Roy.
Thank you.
Thank you.
You're welcome, guys.
Thanks, Roy.
You're welcome. It's always fun.